Welcome to the BAI show. My name's James Rankin and I am sitting down with Amol from Ask Financial. Welcome.
Thank you, James. Thanks for having me.
A little bit of a different take. Your background is not buyer's agents, or you're not a buyer's agent. You're a mortgage broker. So you're in that finance space, but you work with BAs, right? Like you work with buyer's agents, and I know you're doing a webinar with Manoj in a couple of weeks. Is that next week or?
It's on Tuesday.
Oh, it's Tuesday. Yeah, cool. Yeah. What's that one going to be about?
It's about scaling your portfolio, but we are just targeting the Marathi community where I come from.
Yeah.
And it's not for white audience. It's just for this particular community.
That's right. He did say that. Because what's the dialect?
Marathi.
That's it. Yeah, I remember Manoj saying. So, I mean, that's a slightly off-topic thing, but it's a good topic to talk about because that's a niche, right? Like you guys are going super niche in terms of who you're targeting.
Yes.
And in terms of what's the the market, what does that market look like in Australia?
See, to be honest, in this particular space, there are hardly any buyer's agents, there are hardly any brokers.
There you go.
And there is no education piece which anyone can provide. So the common mistakes that every investors do is that, hey, I'm living here, I want to purchase close to where I live. And this is the common thing I have been receiving feedback from a lot of people in the community. So when we had a chat with Manoj that there is education required, and Manoj is one of the BAs from the community, I can speak the local language as well. So I thought, let's do this. It's more about the education rather than any sales pitch.
How good. Yeah, he did say that. I mean, Manoj is a legend, absolute lovely guy.
Yeah.
Built his business through the cricket club and all that kind of stuff, like just done so well.
Yes.
He said, his business is like 98% referrals.
Yes.
Like as in his past clients and like from the cricket club and all this kind of stuff, which is, the best business model you can ever get to. But that's the webinar going niche, going like boiling it down to this one community to talk to and identify that. In terms of I find cultural backgrounds, they'll have specifics that I used to work with a lot of Indian clients in the new home constructions, and I'd always ask like, why wouldn't you buy an existing property? And they're like, we don't want other people's problems, right? Like we just want to build new, we don't want other people's problems. Dealt with all the Vastu and all the fun stuff with building. Yes. But in terms of this community, is there anything like nuance that they would want to know that, another community wouldn't?
See, everyone wants to grow their portfolio. Everyone wants the financial freedom. And in Australia, property is the main backbone. So having that educated route rather than just gambling and putting the money to the brokers or just buying based on having that barbecue chat, hey, where are you buying? I'm buying here. Okay, let me buy it as well.
Yeah.
So having that educated, data-driven route is always going to be more beneficial than just randomly gambling and putting your money out.
Yeah, the barbecue chat, that's classic, right? So when you say that, what do you mean by it? Barbecue chat. I know what it means, but maybe just explain.
So barbecue chat is like your friends having the chat about the discussion about the property. Hey, I'm investing here. Okay, let me invest where you're investing. So from the data perspective, it may or may not make sense.
Yeah.
And just investing through your emotions rather than the proper fundamentals, which is a classic case with most of the people.
Yeah, it's just it is a classic scenario in Australia. Like people go, and everyone loves property, right? Like I was talking to even the guys behind the scenes before we jumped on about property, right? Like Aussies just love it. And the barbecue chat, Uncle Bob coming over and saying, oh, you shouldn't buy there, that's crap, or whatever it is. You shouldn't buy apartments, you shouldn't do this. And the experience level is typically not there. And it's, the other scenario is if the Uber driver's telling you like, it's probably too late, like in terms of just getting that information. Yeah. But you guys do specialize when we're looking back at the business and what you focus on from the mortgage broking business. You built yours mainly around investors, right?
Yes. So my niche is into investment space. And see, when I was building my portfolio, I used to work at ANZ before starting my own business. And when I have an investment property portfolio of 10 properties. So when I was building my portfolio, for the first 2-3 properties, it was pretty vanilla deals for most of the investment lending managers. But when I was scaling my portfolio, when I was about to hit my serviceability ceiling, I couldn't find a broker who could help me and assist me. I used to go for different meetups. I used to put things on property chat, and I met few investors who had 100 plus properties, and they said, trust lending is the way you have to go. And then I started exploring, and then that opened up doors, and then I started. So when I was always passionate about property. So when I wanted to get out of my banking career, I wanted to be broker. I have the analytical thinking. I have the data analysis background. So mortgage broking automatically resonated more with me. So when I wanted to be a broker, I thought investment niche is the way to go for me, because that was my experience as well. And I can add more value to the people who are struggling to scale their portfolio. And this is how I decided that, I want to be more investment savvy mortgage broker.
Yeah, and it makes sense, right? Like you're already interested in it. You'd seeked out, other people that could do it. No one's really doing it. How many properties did you have when you jumped out of, the security of the job into the into your mortgage broking space?
So I already had at that time 8 properties.
There you go. Yeah. So you've experienced it.
Correct.
And you've built that portfolio just off pure knowledge. And then were you directing mortgage brokers? Like when you figured out about this trust, you were directing the mortgage brokers? Yeah.
Absolutely. Yeah. And again, found it very difficult to find the broker who understood different types of trust, how the trust lending works, how every lenders treat trust differently. So I had to learn that hard way. And I thought, let me make it easy for my clients.
Yeah.
Yeah.
Yeah. It's, that's usually how things are born, right? Like out of necessity. So in terms of the broker business, you got a pretty clear plan. You've done it yourself. It's like, hey, if my clients want to replicate what I've got, then did you put that on display and you said, hey, I've got this thing and I can help you create it as well?
Absolutely. Yeah. So what I do is every December, I do a pet project. So initially when I started with the broking, I wrote an ebook on how to find your hotspots, what are the data tools you need to look, especially for the novice investors, rather than going to the brokers or making those basic mistakes. It's just a 40-page ebook that I had written. Then over the years, I had different Excel models, which I prepared. So with the modeling skills and all the investment-led different models. And then we decided that, hey, these spreadsheets and all are not good. So that led to this investor.io, which I've started.
Yes.
Which we can talk about that as well. But this is how, I wanted to niche out into the investment space and have that all the tools ready for me to serve my clients.
Yeah. And what is a typical client? I know they're investment, but what's your avatar? Like, what do your clients look like?
Literally people purchasing their first investment property to I've got people who have 15 plus properties. So it's a wide range.
Yeah, it is a wide range. And that first person that comes in, I'd imagine it's not so much a cookie cutter approach because I've spoken to you and I know you're very hands-on and you want to know everything that's going on and you know the space back to front as well. Like you just know it back to front.
See, every person's financial situation is different and people compare that, hey, this person has X number of properties. Their income is different, their situation is different. So first of all, you shouldn't compare yourself with other person. Everyone has their own journey. But of course, whatever based on your journey, you need to have your end goal in mind. And then I'll help you how we can reach that particular goal.
Yeah. And that's what I found, even on my own journey, like buying investment properties and trying to speak to a broker and just get this review done. Like, because it's more about planning, right? Like most things are achievable. It's just in the planning. So you get your first, or you're working towards your first investment property. And if we took a very, standard-ish approach to it and we said, 200K income, they don't have kids yet, but they want to go and rent vest, right? Like this is a term that is pretty widely used now. Yes. They want to go and rent vest. They don't have any savings. What would you say to do? Like 200K income, young fam or young couple wanting to go and buy their investment property?
See, first couple of properties, you need to save up for deposit. So there's no magic unless if your parents are happy to be a guarantor, that's a different situation. But a couple of properties, you need to save up money. But buying your first asset is a foundational asset is very crucial. So you get the right one so that tomorrow you can access the equity, fund your next purchase. But after you have 2 to 3 investments, it becomes a little easier so that we can extract the equity and fund the next purchases. But for your first couple of properties, it is important that you save money, have the financial discipline, especially when you are on that wealth creation journey. It's very important to be financially disciplined and especially get rid of the liabilities which are impacting your borrowing capacity as well. Your credit cards, car loans, personal loan, HECS debt, private school fees and all. There are ways to structure things, but get rid of the liabilities and be financially disciplined. Have a goal, work towards it.
Yeah, and that's like a lot of people don't understand like DTI and all of those terms that when you have a car loan, for instance, like if that person or that couple, $200,000, very, very simple. They're going to be around, 1 to 1.2, somewhere in servicing, right? And in terms of that number, that's just pure income. But then if you go and hit that income with rent, with a car loan, with credit card, it starts to dwindle pretty quickly, right?
Correct.
Yeah.
Correct.
And is that where you see most people, falter? Because it's not right there. Like saving for a deposit, it can take some time. And a car's much easier. Like the car's right there. They're going to give me the finance and they just go and do it and they forego, the long-term gain for that short-term, pleasure.
Always tell the clients that whatever your salary is, 20% first you save it and the rest of the amount you spend towards your living expense, towards your cars or whatever you want. So you're not living like a tight ass as well.
Yeah.
You are living a good life, but savings is first important. The common mistake we do is that we spend money and whatever the amount is left, then we save that money to the other way around. So first save your 20% and the rest of the amount, then you have this. Because when you, at the end of the month, when you see that there's only $5 left, you're not going to go out in a pub and spend that money, right?
Yeah, exactly. And that first deposit, typically, and this is what I went through, and it's a long time ago. Like I started investing in property, years and years ago. So you were able to like essentially recycle that deposit. And you only had to save the deposit once because you get that, initial property.
Correct.
And then you just keep ripping it out to go. The ratio back then was probably like a 2-to-1 in terms of capital growth, 1 cash cow.
Yes.
Is that still similar, like in terms of what you're...
Given the interest rates have gone significantly up and the rental yields are not as great as it used to be, I would say that for one property where you're focusing more on capital growth, second property can be a little about rental yield focus. See, there are properties where you can get a little bit of balance of both, but in the current market, most of them are going to be huge negatively geared.
Yes.
Yeah, so having that right structure in place also makes a lot of difference.
Yeah. And I know we can't go into like advice or anything like that. So there is a disclaimer on the front of this, but in terms of just growing that portfolio, so that person that's coming in, they want to get the first property, they go and tick that off and then they scale from there. If they're, just working their jobs, they're going to have a couple of pay rises here and there. What would be a time frame that someone could go and achieve, a realistic portfolio that if they held, and we're going to call these people 30 years old, what would be a realistic time frame for them to build a portfolio that would sustain a lifestyle in, say, if they're 30, say 20 years, right? Like, is that a big enough time frame?
Yeah. So see, especially in your acquisition phase, if you can be a little aggressive because you're holding the properties, you can hold them for the next 15, 20 years and you can enjoy that full market cycle. So in the acquisition phase, you can be aggressive. There are clients who are extremely aggressive and buying 4 properties a year. But even if you're targeting 1 property a year, which is more sustainable as well, so you can expect a little bit of capital growth, extract that equity and go for your next property the following year, it's more sustainable. So for next 7 years, even if you're targeting 6 properties, that is enough for you to get that passive income of 150 to 100K after 15, 20 years.
Yeah, I know that's a pretty good time horizon, like for a lot of people, you obviously meet people that are just like, oh no, like I want to go harder than that. But I think for the majority of people, they want to work till they're probably 50, 55, 60, whatever that.
Yes.
That's where the majority will sit. And if they do start chipping away at this early, then they can get to that point.
Absolutely. So the data says that 70% of the people sell their properties in the first 3 years.
There you go.
Yeah.
So why do you think that? I mean, I've experienced that too, and it's always right before some sort of boom or increase.
Yeah. Look, see, the main property cycle, if you look at 7 to 10 year cycle, your property is not going to grow 15, 20% every single year. So the main growth happens into that 2 to 3 year period. After that, it's going to go into that, silent market, downward market, and then it starts again booming. So when people say that, hey, my property has doubled, let me sell it. And after you're selling it, you're going to incur a CGT, you've paid the stamp duty.
Yeah.
And when you look at the net profit, which is in your hand, that's hardly peanuts.
Yeah. What do you think of that as a model? Like I've heard it come, it's definitely bigger in the States because they have, their market fluctuations are much harder than ours. Like and the peaks and troughs are, greater. But I've seen that come across in Australia now where it's buy, bottom of the market, try to get some sort of influence on the market, sell at the top, take that 100 grand, put it in your back pocket and keep going.
Yep. That particular strategy works really well in SMSF, where your CGT is just 10%.
Oh, really?
Yeah, CGT is just 10% in your SMSF if you're holding the property for over a year. So what you do is you purchase a property in the upcoming market, say for 600,000, enjoy the growth, sell it for 900,000. After paying the agent cost and CGT, you're netting 250K in your pocket.
There you go.
And you can bump up and you just rise and repeat this. In no time, your super will be almost in 12 years, your super can be around $1 billion, right?
Wow. Okay, so it's like, to call it a term, day trading in your super.
Kind of.
Yeah, with property.
Yeah. So it all depends. So you need to have a strategy. So there should be always an exit strategy. So when you're getting into the property, what is going to be your exit strategy? How long you're planning to hold? If your plan is to flip it, we know that this is the time frame we're looking at. This is what the profit is looking at.
Yeah.
If you are looking for long term, then just buy and set and forget it. If you're planning to do a development, so it depends. You have to get with a proper, clear strategy what you really want to do with that property.
Yeah. And that is a lot of the time people just don't know.
No.
Like they have no freaking idea when they it's just I want to buy a property.
Correct.
Like that's it.
Correct.
And how do you work through that with people?
I educate them. That I in my discovery call, I ask the questions that what is your plan? Why you want to do it? Why it is important? What's the time frame you're looking at? And sometimes people have unclear directions. They don't have the proper strategy in place. So my job as a investment savvy broker is to guide them and educate them.
Yep. And it's like, for me, it's been about options. Like I just want to have options.
Yep.
Like at the end of it, there's not too much structure around what we're doing. We just buy as many properties as we can. And at least that's how it started. And it was just options.
Yep.
Like I just want options.
Yep.
Have flexibility at the end of it.
Yeah, but see, situations change, things change. I may have planned that, hey, I'm planning to hold this property for X number of years, but life may have some, changes in it. That's okay. That's okay. That's completely acceptable. But start with your end goal in your mind and then work towards it.
Yeah. And what are some of the reasons why people would go and like if they've come to you and said, hey, like we want to do X, are there any top reasons why people start a property portfolio?
Predominantly, it's the financial freedom.
Yeah.
Because, the Australian share market is not as dynamic as the US share market. So property is the main backbone. And even all the expats and everyone loves the property, which, Indians and Chinese are pumping and they are making the Australian property boom as well.
Yeah, absolutely. So it's always fun to talk about this stuff. Like obviously I could keep going and talking about property investing, but in terms of the BAs, like the buyer's agent space and what you currently have seen, how long have you been doing the mortgage broking business?
So I started full-time in 2022.
Okay.
Yeah.
Yep. So full-time 2022. Man, you've flown. Like just talking about what you were writing off camera, that's crazy. Like good on you.
Yeah.
That is phenomenal in such a short period of time.
Yeah.
So the BA, you would have seen the BA space like grow, right?
Yes.
Like, so did you know what a buyer's agent was when you first started?
The mortgage broking or my investing?
When you first started your mortgage broking business, were you aware of buyer's agents?
100%.
Yeah.
So I purchased my few of my properties through the buyer's agents.
Okay, got it.
So I was well aware. So I purchased of 4 properties out of my 10 properties through a buyer's agent.
Yeah.
Back in 2018, 2019.
Okay, cool. So you've experienced it. Yeah. And now in the broker space, we spoke about Manoj, who's a buyer's agent that you're doing the webinar with. What other relationships or, how have you worked with buyer's agents over the years?
Again, buyer's agents want to work with a broker who speaks their language, who understands the data. And it has helped me to ease into this space because I speak their language, they speak my language.
Yes.
Yeah. And its ultimate aim is to make sure that the customer is getting serviced and we work as a one team, which has really helped.
Yeah, absolutely. And if a buyer's agent was wanting to, start building connections with a mortgage broker, what would be some relevant information or relevant value that they could provide you other than clients? Because a lot of them won't have clients at the start, right?
Yes.
Yeah.
Yes. A lot of buyer's agents reach out to the brokers because they want leads rather than, I would say, that what connections that you can build and how you can add value to each other is more important. And ultimate, the byproduct is going to be the leads, right?
Yeah.
And
for sure.
Which I get a request on LinkedIn on every single day, especially new buyer's agents saying that, hey, I want to catch up with you and let's see if we can share the leads and all.
Yes.
So, brokers also want to work with a good buyer's agent. Buyer's agents want to work with the good brokers.
Yeah.
It goes both ways.
Yeah, and the course has definitely worked because that's what we teach in the course. And it's like, especially LinkedIn, because it works. That's a professional platform. There are a lot of brokers on there that will communicate. But yeah, you guys just get hammered, like absolutely hammered.
Yeah.
So is there any nuances or is there any thing that they could differentiate themselves rather than just saying, hey, I'm a buyer's agent. I notice you're a mortgage broker. We're in the same space. Let's work together, or, let's see if we can catch up and have a conversation.
I don't want to name it, but I've seen one of the buyer's agents. He is all over the place on LinkedIn.
Yep.
And he just writes about his stories and how he is working on things. And then you feel like connected with that person. He does not DM any brokers. And then you feel like, then I had a chat with him and he's a wonderful human being.
Yeah.
So I think that was a really standout rather than you DMing and spamming each other's inbox.
Yeah.
Just show what you genuinely are, what you're doing, how your business is, how you are helping the clients, what values you're adding to people's life.
Interesting.
Just share those stories and people will attract.
Yeah. It's as the space gets more competitive, it is definitely something that people need to look at. Like if you're becoming a buyer's agent, if you're wanting to become a buyer's agent, you can't just call yourself a BA. You know what I mean? It's the same as the mortgage broking space. Like you've gone hyper focused and hyper niche. Like this, there are quite a few niches within the mortgage broking space, but you've gone investment savvy. Like I want to be investment savvy and more scaling portfolios. So it's not so much client buying one property. Your ideal is like this person that wants to go and build 5, 6, 7, 8 properties.
Correct.
And yeah, that is a niche on its own. So I think it's very relevant in the BA space as it is progressing, just to figure out that niche. The investment side of the business as well, like in terms of the real estate industry, what impact do you see the buyer's agent space having on that?
See, every buyer's agents now, it's become such a crowded place since the time back in 2018, 19, there are hardly any buyer's agents, right? Now it's become very crowded space, and same goes with the broking. So when I started, we had 16,000 mortgage brokers across Australia. That number is sitting as 26,000.
Yes.
So the entry barrier to these professions are very low. Doing the Cert 4 and all, you can be a broker. Doing a certification, you can be a buyer's agent. But to excel in this particular space, you need that proper skills.
Yes.
As well as you need a little compassion and passion to service these clients and help them to grow it. And ultimately, when you show that, it's a business where people refer you. When they are getting a good outcome, they will refer you to you.
Absolutely.
Yeah.
Yeah. And the specialists wins. So niching, what we were saying before, but then specializing in a certain area. So whilst you can, like boil your business down to what you know, and you've gone from, working at a bank, building a portfolio, and then just helping clients do the same thing as you. So I've seen a lot of buyer's agents that are coming through that space do a similar thing. So, they might be an owner-occ buyer's agent. So they're local to an area. They bought their property, they live there, they live and breathe that community. So they just fit into that. And then you've got others that are just like so investment savvy and, a term that you used, but and that's something that they can replicate because they've gone and done it themselves. So they can just build upon that.
Yep.
Yeah. And from, just going back to your business and having a look at what it looks like in the landscape of investment. So the people, you've come across over the years, 100 properties here and there. Do you think that's still achievable? Like the 100 properties that you see
The lending
people?
rules have changed significantly.
So much.
Yeah. Earlier, you could just borrow 105% straight away.
Craziness.
And get it, right? Now,
And what does that mean? Like a lot of people don't know what that means. I say it as well. I'm like, yeah, when I borrowed 105%, so it was all good.
So bank used to lend you the full money.
Yeah.
Now you can still get 105, but you need to have an equity to fund that 25%.
Yeah.
So back in the days, bank just used to lend you 105, including your
stamp duty
and all the other cost. Plus, with the trust lending, bank just used to exclude that. Even if it's negatively get, they never used to look at it.
Yeah, crazy.
Things have changed significantly, and the lending rules, especially after the responsible lending back in 2018, the rules have changed significantly, and it's getting tighter and tighter.
Yeah, it just continues. Like after, what was it, 2019?
2018,
2018, yeah. The Royal Commission, like
Correct.
That was, fun. I just started my business, just started the BA business,
Yeah.
specifically targeting investors. And I'm like, what the hell happened? Yes. The lending was crazy back then. Like we were buying a property and I remember speaking to the broker, whether or not he was telling me porcupines, you could probably outline and get to the bottom of it now. But he said, we've missed it for this month. We have to wait till next month. Because the banks were literally specific, because it was a percentage of their loan book, right? Like they could only write X amount of their loan book, like 25% could go to investors. Mm-hmm. The rest had to be owner occ.
Yes.
So if they were at their capacity, like 100 million that they'd lent, 25 million could only go to investors, 75 to owner occs.
Yep. So that's more on the banking term. There's something called as RW, risk-weighted assets. So for every dollar you lend, they have to keep certain portion aside.
That's right. Yeah.
Okay. So if they max out that particular thing, they'll cut down on it.
Yeah, there you go. Yeah, it was just an absolute crazy time. I remember it was such a struggle, and investment just sort of fell off a cliff. And then we also had the election where it was negative gearing.
Yes.
So that was like the one straight afterwards. But they keep just chipping away. Like they just want to keep hammering the lending space. And yet Australia has the most profitable banks in the world.
Yes.
So it's interesting. I mean, that's probably more from the like APRA, right? Like the APRA's pushing down on it.
Yes.
But the growth of a portfolio, what do you think a normal person, because I think people can get lost in the properties, like the amount of properties. Mm-hmm. You hear people talking, they've created 50, 60, 70, 100 properties, but they're $100,000 studio apartments,
Yes. So again, it's not the number of properties you hold in your portfolio, it's the quality of it. So you can still get 100 to 150K by just holding 2 to 3 assets.
Yeah.
It's the type of quality of assets, how much it's giving you. So
and that's the thing. That's the ego thing, right?
Yeah.
Like people go, 10 properties, or I know you've got 10 properties, and you've got good properties,
Yes.
but some people just want to say that number and it's not actually relevant to any sort of wealth.
Yes.
Because they've just gone and bought rubbish properties.
Yeah.
And that's the first thing that I noticed as this started to come back, like as a portfolio builder after that Royal Commission and just the general talk on the street. I looked at a lot of people's portfolios and I was like, they're rubbish. You know what I mean? Like they're absolute crap properties because all you've done is buy cash flow producing assets essentially that would allow them to go to the next one, right? Because it's almost a, what do they call it? It's like a lease stock, right? Like it's almost a lease stock type loan where they cover themselves and the bank doesn't really take it into servicing and you just keep going, but they don't go up in value. Yes. They just never go up in value and they're hick towns. I'm talking, Timbuktu, mining towns, all that kind of stuff.
Yes.
So just in that general terms, where do you think people would need to go? Like if we took that scenario, the 30-year-old couple, $200,000 of income, what sort of properties and how many properties do you think they'd need to buy?
See, first property, as I said, is going to be foundational asset. We are going to concentrate on capital growth.
Yep.
It will potentially be a negatively geared property. That property can go under personal name.
Yep.
Then second property or third property onwards, we can go under trust lending where there is no negative gearing benefit.
Yes.
So those properties are going to be a little higher rental yield focused properties. And again, when I say that higher rental yield, even if it's right now the rental yields are low, there are ways to increase your rental yields. So my property in Queensland, Brisbane, what I did is I had a house which was rented for $650. We put a granny flat at the back, got $550. The total income is $1,200.
Yeah.
Perfect property for trust lending.
Yeah.
You can manufacture that. You can do a cosmetic renovations. You can subdivide, build 2 townhouses. You can do all those things to bump up your rent.
Yep.
So you have to have those creative strategies in place to bump up and make sure that it's sustainable for trust lending. Because, for example, if you're buying in Melbourne right now, where the rental yields are shit at 3.5%, your cash flow is going to be negative by 20 to 25 grand. And if you're planning to have like 5-6 properties, which is going to be negatively guided by 2025, it is going to put you in financial distress.
Yeah.
So right properties under right structure, right?
So that granny flat, what are they typically costing at the moment to put on the back?
It costs you around 180 to 200K.
It's not bad. So in terms of that top up, and then you're getting the 500. So it does become like higher cash flow, right?
Absolutely.
Because 500K on 200 is pretty good.
Yeah.
Okay. And then the first one, foundational, would you say like typically, again, general discussion, people would buy properties in their personal name, like max out their personal lending?
So under trust,
Yeah.
your borrowing capacity is based on your personal borrowing capacity. In fact, your borrowing capacity goes down with the big 4 banks under trust lending. Why? Because there is no negative gearing benefit.
Got it.
So for example, if your borrowing capacity is sitting at $1 million, under trust it is going to be 800,000.
Yes.
So we need to get under trust before you exhaust your borrowing capacity. So rule of thumb, I usually say that it's good time to get under trust when your personal borrowing capacity is sitting around that 800-ish mark.
Yep.
So you maintain or preserve the borrowing capacity of 600, 650K. We can go with different lenders.
There you go. Yeah, that's interesting because I've heard it on the flip side as well. Like people just max out.
I get so many cases saying
Yeah.
that first max out your borrowing capacity and then go under trust. You're not going to get any borrowing capacity under
There you
trust.
go. Yeah, right. And the I'm sure we could talk about that forever and the structures and all that kind of stuff. But yeah, back on your actual business. So Ask Financial. Where to from here? You've only been doing it for 3 years.
Less than 3 years.
Yeah. It's crazy, man. So good. Team of how big is the overall team?
I've got credit analysts, 11 credit analysts right now.
Yeah.
And we are growing. So we'll be having onboarding total 9 staff members in Australia in this financial year. AI or the machine learning and the automation is what we are working on, which potentially will differentiate us from the other brokers. So of course, your knowledge expertise is one part, your service proposition is another part, and your tech is going to be another part.
Yeah, and that's the speed. So you're using that more from a speed and volume as well, right?
Correct.
Yeah.
Correct.
So get them through, and the bots can probably do a better job as well, like policy matching, no doubt. So because that's another part that brokers do, right? Actually, that's a good point to look at. I know what a broker is. My explanation for a broker is you can go to Levi's store, like you can go to the Levi's store and you can go in there and you can look around and buy a pair of jeans from Levi, right? Like that's it. But if you go to Maya, they've got all the brands. There's like every single jean brand that you can think of. And there's going to be the one that's, fits you the best, is the right color, is the right, shape, size, everything that you need. That's kind of how I refer back to brokers.
Yep. Spot on. You're pretty spot on.
So,
but many times it's not just what type of brand you like or fit. It's about giving that proper guidance as well, because many times people won't know about the quality of the product that you're buying as well, right?
Well, that's the next piece. So it's down to the quality of the person that knows all those brands.
Correct.
So a good broker, I would say a lot of brokers, 90% of them would just work with the top 4. You know what I mean? Oh no, just push them to CBA. Like, just push them to this because it's easier.
Yes.
Like just go with them. But then if they're not on this investment path, like as in that broker doesn't know what you need to do from the investment path to build the portfolio, they could set these people up wrongly from the beginning.
Yeah.
And is it hard to unwind?
Absolutely.
Yeah.
It can be very expensive because changing the structures or things like that, it can be very expensive. It's like you're selling it, the trust is buying it, vice versa.
Yeah, of
going
course.
to incur a CGT, the trust is going to incur a stamp duty. Expensive.
So it goes
exercise.
again. So if I bought a property in my personal name, paid 500, it's gone up to $1 million, and then it's like, oh, I'm going to pass it over to the trust.
Yep.
It's that whole event, right? It's a
So
normal
you're selling
sales
it,
event. Yeah.
and trust is buying it. You're going to incur a CGT. Trust is going to incur a stamp duty again. Very expensive.
Yeah, that is crazy. Yeah, and just going back to that, what the broker does, because there's all these different banks and there's all these different tiers and policies and all of that kind of stuff that you guys have to get your head around. How often do the banks actually change their policies?
We get comms every single day from different banks. Yeah. So
Yeah, and then
to be on top of the.
I've seen them, totally change policies, like completely just remove policies. And then it's like, well, that's no longer an option. So yeah, if they've got a pre-approval, do they usually honor that pre-approval?
They will honor that pre-approval.
They'll honor it. Yeah. So again, do you do most of the time pre-approvals? Like, will you run them?
We do pre-approvals.
Yeah.
Yeah. So I would say that 70 to 80% of applications have pre-approvals.
Yeah.
Yeah.
Yeah, there you go. Yeah, because I've worked with brokers over the past that don't really do it. Like they don't really do pre-approvals, but this is a clear case as to why you would.
Yeah. It's just that now market is so competitive, and the real estate agent asks you, do you have the pre-approval? Then only I'm going to showcase the property to you.
Yeah, of course. And yeah, your business, you're growing, like you're really wanting to grow. Where to from here? Like over the next 12 to 18 months, what does the business look like?
Again, we will be onboarding the brokers, and so in the market, I want to be known as the top Australian broker in the investment niche, and want to work with want to help all the everyday Aussies to build their portfolio. From the dollar perspective as well, we want to settle 500 million for 2025-26, and we want to build that portfolio for the clients. So.
Mate, it's so good. Yeah. It's so good. And I really appreciate you coming on. It's been a great chat. I could just talk about this stuff all day. So this has been awesome. Thank you.
Cool. Thank you so much, James.